This is the June 28 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Aaron Curtis from Midco. He's in Bloomington, Illinois. Matt Bennett of agmarket.net out of Windsor, Illinois. And Al Kluis of Kluis Commodities out of Wayzata, Minnesota. Commodity Week, of course, is a production of Illinois Public Media. It is public radio for the farming world, where you can find us online at willag.org, willag.org. Running through again the United States Department of Agriculture's Friday release of the June acreage and quarterly grain stocks report. It shows farmers planted 91.475 million acres of corn. That's about 1.5 million more acres than they expected to plant when that March report came out. Soybeans were down 410,000 acres to 86.1 million acres. Some of the other big numbers, the quarterly grain stocks report shows on-farm storage for corn at 3.026 billion for the old crop. That's around 37% higher than it was at this same time last year. Off-farm at 1.96 for a total of 4.993 billion bushels of corn. Soybeans in storage at 970 million. I talked with Aaron Curtis about the numbers. I asked him what he saw.
Well, I think the one that stood out the most is probably the corn acres here this morning being, 1.1 million above the average guess, roughly almost 1.5 million above the March number. I think that's probably the one that stood out, probably got the most attention from the market here this morning. Kind of looking at the data, you see Kansas up 600,000 acres for March, Iowa up 300,000. Now, the harvested number in Iowa is going to be interesting to watch here as we move forward, right, with some of that flooding up in the northwest corner. But as in terms of planted numbers here this morning, that's the bulk of the change. Minnesota up 200,000, so kind of add those together, and those are kind of the bulk of the change, with Kansas being the big part of that, up 600,000. So, and then you look at the quarterly stocks numbers, like you mentioned, and see the on-farm corn stocks up 36% from a year ago, and I think that continues to remind us the farmer still has quite a bit of grain to price, and that's why it's led to some basis levels, especially out west. We've seen some ethanol plants having to continue to push for grain at some premiums here recently due to the fact the farmer continues to be a tight holder of corn. So obviously today's not going to help with any of that movement, Todd, with the corn getting down almost 20 cents here as we talk. So that's going to continue to cause the farmer to be a slow seller, and now looking forward, right, got to count on some sort of weather issue now in July in order to get this market perked up, because nothing good in the report today for corn.
On that note, as it relates to the on-farm stocks, when I went to go make my phone call yesterday afternoon for the closing market report, which generally happens at about 20 after the hour of 1, right at the close, not during the report, or during the time that I'm airing the programming, I had to run through. The first one was not available because they were in the middle of an interview, and then the next two were off. The third one or fourth one was not available at that point. It wasn't until I got to the fifth analyst, and one of them wrote back to me eventually and said, farmers are panicking today, and I can't get to you. Did you feel that yesterday yourself, and are they in more of a panic today?
They're not in a panic today. There has been some pricing that's been seen earlier in the week, and part of that speaks to the basis contract still on the books here, Todd. Is the first notice date today, so decision needed to be made here over the last couple of days on whether or not to roll those basis contracts again to the SEP in a carry market again, or price it. So we did see some bushels being priced due to the fact that there was a decision to be made. But in terms of bushels that would maybe affect the cash market, I don't think there was a lot of necessarily new selling in that regard, because those basis contracts obviously for the large part are already kind of known by the cash market system. So a little bit of pricing, yes, early this week, but very quiet here, as I'm assuming the producers are probably a little bit in shock mode here this morning.
Are the basis contracts mostly on farm, or are they off farm storage?
That would be on farm stuff, or in the elevator stuff, right? It's been delivered already.
That's what I thought. So that 37% that's on farm remains there. That's just a lot of crop.
That's a lot, and that kind of speaks to what could be, a pre-harvest before actual harvest, right? Assuming that a portion of that needs to get moved ahead of actual harvest. We could see quite a bit of movement here in this July-August time frame, especially further west where some of those bigger stocks are, and probably not a great situation moving forward for basis, Todd.
Does it mean very much that the bulk of the extra acres came from the number 5 producing corn state, Kansas?
Well, yield-wise, probably not going to move the needle as much as it would be if it was in one of the I states. But I think what it may speak to, right, in terms of grain movement, assuming that they have a decent crop, is some of that grain that, over the last couple of years that has moved from east to west due to some of the short crops out in that area may not be as needed this fall. If they do have good yields, they'll have a little more local corn that they can source. So, that's something to keep an eye on, probably more in terms of grain movement this fall and next spring than anything, Todd.
Turn your attention to the soybean numbers. Acreage down 410,000 for them. What'd you think of that figure?
Kind of speaks in line, right, with what the corn is doing. It was similar. We did see some reductions in Iowa, pretty much par for what they increased on the corn side. Kansas, though, bean acre, up 300,000, so up on corn and beans. So kind of interesting there. Big number. Missouri down 400,000 from March there, so that kind of stands out a little bit. Illinois up a couple 100,000, and I think that probably speaks a little bit to some of the delays we did see. Saw some issues south of 70 this year in terms of getting some corn planted, and a little bit of isolated delays around the state, and maybe picked up a few bean acres that may have been intended for corn if it wasn't for a little bit of a choppy start there in May for the planting season. But in terms of the reaction today, beans holding in there, and I would say the bean numbers relative to corn held in there better than what we saw on corn. Quarterly stocks on beans up 8 to 10 million, higher than what the market was expecting. So not a monumental change in terms of expectations.
Does today's report tell you anything about what producers should do relating to new crop sales of grain that has to go to the elevator?
Yeah, these futures here today at 418, I don't think you're going to get a lot of interest in folks wanting to price that. That's going to put cash values delivered to the elevator under $4. You're probably below break even in a lot of cases, so I don't think you're going to see a lot of interest today. So it's going to be interesting to know how this market responds. Waiting for, obviously, to see how we close today, but then you throw in a holiday trade next Thursday, some talk of some heat building again mid-July. Funds are adding to their net short position today in corn, so we're going to have a pretty sizable short position going into some key pollination periods here into July. Now, obviously, we've had some rain earlier this week. We've had some rain again here over the next last 12 hours to next 24 hours. So that's going to set the situation up for a lot of the Corn Belt in pretty good shape going into some heat building. But a lot of it's going to depend on where that ridge settles out here as we head into the July, right? How far north does it get, and how much rain does it let through? Because it's still going to need a rain or two to finish off this corn crop. And really, from a marketing standpoint, Todd, that's all about you have left in terms of wanting to get a rally, is if we have some sort of a hot scare here in July. Because if you put in higher acre numbers today, bigger stocks, you're looking at ending stocks next year, in that 2.2 to 2.4 billion bushel area, and that does not argue for a lot of higher prices going forward.
That's Aaron Curtis. He's with Midco out of Bloomington, Illinois. Matt Bennett joins us as well. He's in Windsor, Illinois at agmarket.net. Aaron mentioning what that balance sheet for corn particularly might show now. Once we get to the July figures for the World Ag Supply and Demand estimates, something in the range he believes at 2.2 to 2.4 billion bushels. Have you figured it forward, Matt?
Yeah, if you go with a 181, you're looking at about 2.5. I don't think we've got a 181 at this point, but bottom line is that it's rough. It's a lot rougher than what it was this morning. So 91.5 with 91% harvested, and that might come down somewhat. I'm going to call it about a 178 right now, Todd, and that puts me about at a 2.28. And so 228 certainly is more than what we'd like to see, and it certainly isn't going to be friendly towards price action.
Did you roll forward the numbers for soybean as well?
Yeah, for soybeans, I mean, you're going to take just a little bit out of the balance sheet. Instead of talking a 450 to 500, you're talking more along the lines of maybe like a 375. So 375 to 400. It's still plenty of beans, but it's certainly less than what we were talking about.
And as you thought about what this means to the price in the fall, or maybe prior to the fall, and what it means longer term, what kind of conclusions have you come to, if any?
Well, I mean, essentially, sub $4 cash prices are something we're going to have to get used to, unfortunately, Todd. I know people don't want to hear that. It's just what it is. It's a tough go right now, not the easiest situation, but whenever you're talking about 2 straight years of 2 billion plus carry and you're building stocks, at the same time, world stocks are certainly not getting any smaller. With that being the case, I think you're probably going to head towards that maybe even like a 375 area. I mean, we've been watching 2014 versus 2024 for quite some time. And the chart for 2014, of course, got awfully ugly towards the end of the marketing year, sub 350. And I'm not saying we're going there, but we certainly have the right recipe to take us lower than what we've seen in years. And so a person has to be cognizant that there still is risk on the table for a grower between here and their coverage level. And so you could manage that risk accordingly.
So as you were thinking about it, you've got, at least in corn, both the on-farm storage number showing a big figure and acreage up, and to combine, they just put a lot of pressure into that marketplace.
Oh, absolutely. Just a lot of pressure. And unfortunately, we didn't think things could get a whole lot more bearish than what we've seen lately. But then, of course, the USDA comes along and says, hold my beer. And here we go again, So, and I don't fault the USDA. They're just trying to give us the stuff that they're seeing. But certainly, you're not looking at good times right now. It's a tough go, especially with prices for inputs being so stout.
So I have a follow-up question on that same vein, which is the grain stocks figure doesn't mean that there's actually more ending stocks coming into this marketplace, correct?
Not necessarily. I mean, the grain stocks being 100 million over the average trade, yes, is a shock for most people. You're 800 and some above what you were last year. So grain stocks will be higher year on year as far as what your ending stocks look like. But the bottom line is, it's just a challenging situation because the trade knows that all that corn's there. The processor knows that all that corn's there, and so you just don't get much push moving forward out of basis. I'm assuming some of these basis levels would have the tendency to stay strong as you move the market significantly lower. But if you got any rally whatsoever, I think it'd fall apart.
Have you thought about how much damage has been done in the northwestern corn belt, and if it offsets these figures?
I just don't know that it's going to be enough, Todd. At least the trade doesn't think it is for right now. So, it's pretty tough for me to get to the point where, I feel like we're going to be able to have a big stabilizer there. I know that that's tough for the grower that's in that part of the world, but bottom line right now is it just doesn't look like it's going to be enough.
And then Kansas was the place that really planted a lot more acres, both for corn and soybean, surprisingly. What does that mean going forward for basis?
Yeah, I mean, you're not going to see near the draw, especially if they have a crop. I mean, their weather hasn't been perfect, but it's certainly improved. And so you're not going to see this massive pull like we saw a couple of years ago when they were paying $2 over for corn just to try to pry it out of Illinois' hands. Probably not going to see much Illinois corn heading out there, at least relative to what we've seen over the last couple of years.
When you put into a broader perspective the numbers for soybeans today, what's been happening in Brazil as it's related to their tax, that 20% tax, which should be holding grain, soybeans particularly, off of the market there, maybe even corn, I suppose, and then China's political want to not to purchase from the United States. What does it tell you?
Well, I mean, it's pretty concerning. I mean, we have no new crop book whenever it comes to China buying new crop U.S. soybeans. I do think the weather issues in China could necessitate they actually have to buy some U.S. corn, even though they may not want to. But it's certainly been an issue. I mean, you look at Brazil's situation, and the Safrinha crop coming online has certainly got their corn more competitive than U.S. corn now. So I've got to assume that that's going to be the place that China's going to go to get corn. But bottom line right now, it is concerning. We just need to see them actually step in and buy something. We could actually see these markets stabilizing here somewhere if they'd actually start buying U.S. products, but they certainly don't act like they want to.
Matt Bennett is with agmarket.net. Now let's turn our attention to Al Kluis, who's at Kluis Commodities. He's in Wayzata, that's in Minnesota. Although he lived for a long time near or in Mankato, which is on the Minnesota River, but just to the north of the Rapidian Dam. I'm not sure that that's pronounced correctly by me, but there on the Blue Earth River. Thank you, Al, for talking to me. Earlier in the week, of course, the nation really was watching what was happening with the dam there south of Mankato. It's still intact, but has had a partial failure. What I really need or would like to know from you in general is how much damage do you think has been done, not to the dam, but to the crops that are along the Minnesota River, and it runs from Mankato, in this point, all the way to the line on the western edge of Minnesota.
Yeah, it goes from western Minnesota, kind of goes south to southeast down to Mankato, and then takes a hard left and goes north up into the Minneapolis area. So it's a major river. Blue Earth County, where I used to live and where Rapidan Dam is, you've got the Le Sueur River, Des Moines River, Minnesota River, all going through that. I think that county's got more rivers than any other county in the state. And there is a lot of damage. I would say there's 10 or 15% of the acres along those that are submerged and have been for a while. And so their crops are totally wiped out. In addition to that, there's a lot of, it's very flat county, very fertile, highly productive land. And even though it's well tiled, the tile couldn't take all the water away. So many farmers are reporting anywhere from 10 to 20% of their acres that have been submerged. And time will tell, will we get a half a crop out of that, no crop out of that, and somewhat depending on the amount of rain. And unexpected last night, we got another inch of rain. So it's just been one deluge after the other. Very, very frustrating.
Do you have a working number for how much damage you think has been done, either in total production or acreage?
I'm thinking this is affecting about 20% of the prime crop area, and that we would see on that area that's impacted about a 20% loss. So 20 times 20, it could be about 4% that is damaged. That doesn't mean we're going to take 4%. If I had to guess at it, I would look at it this way, Todd, that we're probably going to see about 500,000 to 1 million acres less corn harvested than expected, because that corn is considered planted, even though it's drowned out. For soybeans, probably 500,000 to 600,000 acres that were planted, submerged. But if you've got a 160-acre quarter-section field and you've got 10 or 15 acres under it, that's going to come right off of your production.
So for soybeans, that really is, when you look at the grand scheme, that takes total acreage down by 1 million if you're counting it, or roughly speaking, for the acreage that was released from USDA today, and it's not quite a swap in the increase in acreage for corn, maybe somewhere between half and 2/3 of it. How do you put it into your balance sheets?
I'm just taking the harvested acres down by 1 million acres, so 170 million bushels less. And for soybeans, 500,000 would be about 25 million bushels less. But when we look at the grain stocks report today, it appears we have very adequate supplies.
What does that mean as you're thinking about it related to pricing corn, old and new crop, and soybeans as well?
Yes, yeah. And I think you have to based on all the numbers today, especially at corn stocks and the corn acres, you have to, I think, lower your targets. However, looking at some of our research, and back in March, many farmers signed up for the ARC Colony or PLC, if you remember those programs that we have to sign up for each year. And over time, those reference prices have begun to move higher. As I look at it right now, and it's kind of a moving target depending on the MYA, marketing year average for the entire year. But right now, you are probably going to be getting 50 to 70, as much as $100 per acre payment on that program. On corn, maybe $50 to $70 an acre on soybeans. And so the way I look at it, the government, if you signed up for these programs, is giving you a great big put option. So don't panic.
I bet you've had trouble telling producers not to panic in the last 24 hours.
It's really tough when we're sitting there and a guy's looking at his crop yield potentials going down and the corn market's 20 cents lower. That's a very stressful combination.
All right. Anything else on this marketplace that we ought to know before I let you go?
I'm going to be watching what the spreads do here into the close. I think that's important to watch on a daily basis. And then also if we start seeing these lower prices finally result in some business to China. And I know China, we're not the best of friends with them. They don't want to buy from us. But if prices get low enough, I think we will start to see that.
Al Kluis is with Kluis Commodities and joined our Commodity Week crew, including Matt Bennett of agmarket.net and Aaron Curtis from Midco. I'm University of Illinois Extension's Todd Gleason.